Time for more lessons from one of the greatest traders of all time, Jesse Livermore. And you might know him from that famous book, Reminiscences of a Stock Operator by Edwin Lefebvre. He's a French fella, and my French isn't very good. But in this video, we are going to talk about what Jesse said about the importance of understanding general conditions. General conditions being macro and just the overall health of the market. How is the broader market moving? This was one of the keys to Livermore's success. Here's what he had to say about it. I still had much to learn, but I knew what to do. No more floundering, no more half-right methods. Tape reading was an important part of the game, so was beginning at the right time. So was sticking to your position. But my greatest discovery was that a man must study general conditions, to size them as to be able to anticipate probabilities. So not many people realize this, but Livermore was actually Irish. No, he wasn't. He was actually the first global macro guy, and his greatest discovery was the importance of macro, or looking at the overall market. So he had the same realization that hedge fund manager Stevie Cohen had decades later. And you guys know Steve Cohen. He's who Axe is based off of, if you watch Billions, or if you've seen the 400 videos I've done on Billions. But Steve said that 40% of a stock's price movement is due to the market, 30% to the sector, and only 30% to the stock itself. So a majority of how a stock moves is due to the overall market, which I'm sure you see is why you need to gauge the overall market if you're trading. After Livermore made this discovery, he said, I began to think of basic conditions instead of individual stocks. I promoted myself to a higher grade in the hard school of speculation. It was a long and difficult step to take. He explains it a bit more here. He says, I think it was a long step forward in my trading education when I realized at last that when old Mr. Partridge kept on telling the other customers, well, you know, this is a bull market, he really meant to tell them that the big money was not in the individual fluctuations, but in the main movements. That is not in reading the tape, but in sizing up the entire market and its trend. Disregarding the big swing and try to jump in and out was fatal to me. Nobody can catch all the fluctuations. In a bull market, your game is to buy and hold until you believe that bull market is near its end. To do this, you must study general conditions and not tips or special factors affecting individual stocks. This is so important. Now, what I see a lot of beginner investors do is focus all their time on trying to find the best stock, but they completely forget how that stock is going to move is mainly due to how the market is moving. It's like in the late 90s where everyone thought they were a great stock picker, when in fact, because of the tech bubble, any company that you bought that had a .com at the end of it, yeah, it shot up like crazy. It had nothing to do with the particular company, which everyone found out when the bubble finally busted, but it's a great example of how that works. Stocks move with the market. So most people out here are buying stocks, right? Well, the worst thing you can do when buying stocks is buy stocks when the market is heading lower. When I keep saying market, I mean like the general index, like the S&P or the NASDAQ, because you're fighting the main trend. You can't fight the main trend and expect to win. Most stocks, if the index is going down, are going to go down with the index. It becomes a low probability trade trying to go against that. Even if you found the best, most magical stock in the entire market, doesn't matter. What you should do is hold on to that information and wait. Keep your money in cash, and then when you see the general market turning around, that's when you pile in. Because if that stock is so special, then you know it's going to take off and make multiples of the general market. Maybe it'll shoot up 100% when the market moves 20%. So the first thing you got to do when you're trading is size up those general conditions. See how the general market is doing. So when Livermore started playing this game, the macro game, he really started making the big money. He said, I cleared about $3 million in 1916 by being bullish as long as the bull market lasted, and then by being bearish when the bear market started. As I said before, man does not have to marry one side of the market till death do them part. But I can tell you, after the market began to go my way, I felt for the first time in my life that I had allies, the strongest and truest in the world, underlying conditions. They were helping me with all their might. Perhaps they were a trifle, just a trifle, slow at times in bringing up the reserves, but they were dependable, provided I did not get too impatient. And he's just talking about the general conditions helping whatever he put his money into. Because if you find a good stock in a bull market and you buy in, the fact that it's a bull market is going to help you a lot. You've probably heard the saying, the trend is your friend. Don't short stocks in a bull market and don't go long stocks in a bear market. Play with the trend. And the way you understand the trend is from general conditions. They continue to be by far the biggest potential source of alpha in trading. And that's because most market participants are still focused on the stock picking game and remain completely ignorant of the most significant driver of their stock price's action. Remember what Stevie Cohen said, 40% of the stock's price movement due to the market, 30 to the sector, and 30 to the stock itself. Now, I always heard it as 50% of the stock's move is due to the market, 30% to the sector, and then 20% to its own fundamentals. So it's like a funnel, market, sector, individual stock. So the trend on the higher level matters way more than the trend on the lower level. You need the whole market going for you, then the individual sector, then the stock. And just think about it. If you are going long in a bull market, you already got that 50% on lock. So you have a much higher probability of getting a winner. Then you got to narrow down to the 30 30 and 20%, right? But at least you got the general direction right. So in the system that I use, which is called the NASDAQ All-Stars, this is our private membership site to that system, we take into account the general trend. And the NASDAQ All-Stars, if you don't know, it's a momentum system. So what it does is it takes the stocks in the NASDAQ 100 and ranks them by their momentum. And then basically it rotates into the 5 stocks each month that have the highest momentum. That way you're always with the stocks that are moving and making money, and you're rotating out of the ones that start failing. So the way we rank the stocks is through something called the TSI, the Trend Strength Indicator, which is basically just a regression analysis to see which stocks are trending the hardest. So right here on this list, you see that the TSI is positive for most of these stocks because these are the top 25 in the NASDAQ 100. But the reason these numbers are positive is because it's still currently a bull market. When you're faced with a bear market, these numbers turn red. They turn negative, telling you that these stocks have negative momentum. They're actually trending lower. So when we see all the stocks in the NASDAQ 100 with a negative TSI, that's our signal that we shouldn't be investing. We should be in cash. So that's the difference between our momentum system and a lot of other momentum systems out there. Because for a lot of those other systems, they keep investing no matter what the market environment is. They don't take into account the general conditions. So in a lot of their cases, even if it's a negative TSI, they're still going to invest in the top 5 with the least negative TSI, even though they know it is going lower. And I'm not saying this doesn't work, because it actually does. When you back test it, you can still be profitable with that strategy. But the way we've optimized our momentum strategy is just to avoid investing during those times. Why invest in something that's going down, right? Just keep your money in cash, and we'll sit in cash for as long as we want. Well, not as long as we want. We'll get out of cash when the TSI starts turning positive again, telling us that there is positive momentum in the market once again. And even what we even do sometimes is when all the TSI is negative, the trend strength of PSQ, which is the inverse of the NASDAQ, that actually becomes positive, and we might invest in that. We also might invest in TLTs, which are bonds. Their trend strength becomes positive. But those occasions are more rare because obviously most of the time the market is trending higher instead of lower. But cutting off that tail risk is important, not investing when the market is going against you. And you can see how it's important when you look at our returns over the last 10 plus years. So in 2008, the Qs were down 31%, but our system was only down 7%. And part of the reason why is because our risk control is in place and we're out of the market when things are rough. It's not perfect, obviously. I mean, no system is perfect. We still lost 7%, but that's a lot better than losing 31%. So to me and our system, I think it's very important to be able to size those general conditions like Jesse Livermore is talking about. And that's how we do it in this particular strategy. Now, the NASDAQ All-Stars is actually open this week. So if you're interested in learning more about it and using it yourself, I'm going to put a link up above in this video and down below in the description and comments. You could go to this page and it's going to teach you all about what the All-Stars is, how it works, its returns. Its returns are pretty great, by the way. And it's nice because you don't have to spend too much time actually managing the system. But the links are there if you want to learn more about the system. And we've got a bunch of fallible people using it now and they love it. I love it too. I've been using it for a long time too. But you can check it out and see for yourself. It's only open this week and then we're going to shut it down again. Definitely check it out. And if you haven't already, make sure you subscribe to this channel and hit that notification bell so you get email notifications when our future videos come out. We're doing more videos on the trading greats and the lessons we could learn from them. You don't want to miss them. So subscribe and I will see you in the next video. Stay fallible out there. Bye.